Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. Welcome to the show, everyone. It's wonderful to have you here. Seth Udinsky and Samuel Case with you this morning, in for Mark Manila. Folks, keep Mark in prayer, please, this morning. Today, he's conducting the funeral service for a dear friend of his. So Mark's going to be out today. He'll be back on Monday, though. We are so honored to be able to fill in for him, but please keep Mark in prayer as he is presenting the gospel at that funeral service today. It's a wonderful thing that he is doing for sure. We're missing him today, but he'll be back on Monday. Looking forward to that. You can give us a call, folks, at 610-363-1110. Sam and I would love to talk to you. If you've got questions, give us a ring right now. 610-363-1110.
I just like to talk in general.
Yeah, Sam does. Actually, That's why we pay you, is to talk and press buttons, pretty much.
Professional yapper.
Sam, I'm excited. This is just like old times.
I know.
It's good to be back here with you, brother.
It's a retro show.
It certainly is. Certainly is. We are live this morning, though. It is Friday, January 9th, and we hope that you'll join us. Say hello on our chat as well. On today's show, busy one, of course, your questions. We're going to answer a lot of questions later on in the show. I'm grateful and honored to stand in for Mark and be able to provide some insight for you all. So we'll be answering some of those later. And, of course, our phone lines are open, so you can give us a call. Also, our friend Stefan Padfield joins us in a little bit, bringing us an update on the impact investing front. You don't want to miss that. But before any of that, folks, interesting stuff we saw yesterday. Defense stocks were bouncing. Sam, tell us why. What was going on yesterday?
Oh, man, they sure did, right? So we own a couple defense stocks on our buy list, so you might have saw a pretty big spike. One of them, I think, was up somewhere around 6% for a little bit, so that's pretty good. But this comes in response to Trump proposing a whopping $1.5 trillion military budget for 2027. That's a 50% increase, $500 billion increase, which he says hopefully will be covered by tariff revenue, at least in part. Hopefully all of it will be covered by tariffs. Defense stocks were actually already trading higher following the U.S. strike on Venezuela. In regards to the defense increase, Trump posted on Truth Social saying this will allow us to build the, quote, dream military that we've long been entitled to. At the same time, Trump also says he will not permit dividends and stock buybacks for defense companies until they increase their production, complaining in another post that, quote, companies are not producing our great military equipment rapidly enough and once produced, not maintaining it properly or quickly.
That's interesting. Sam, I'll toss to you and folks in the chat, and if you're watching, if you want to give us a call and share your opinion as well, what do you think about this? Because here's why. There's a lot of different opinions here that we're thinking about when we look at this. Some people are very concerned. Some people are very concerned. They see this as the Trump administration is warmongering. They're preparing for war, or perhaps they know something that we don't. There's some intel. Russia's going to attack, something like that. Sam, I'll toss to you. What do you think about this? Is this a good thing, bad thing, in between?
Well, I mean, I'm always of the belief that one of the very few legitimate uses of government is defense. So whenever we're spending money on defense and not something else, I'm okay with it. Also, I'm a little bit of a believer in the speak softly and carry a big stick. Hopefully, if your military's big enough and mean enough, the other bullies in the world aren't going to want to go to war with you because they know they're going to get a major whooping, a beating of a lifetime. So I hope that's what Trump is doing. Although Trump's not exactly a speak softly and carry a big stick. He's usually a yell loudly and carry a big stick and at the same time tell everyone how big your stick is.
That's right. That's exactly right. Well, I have some breaking news for you here, folks. I agree with everything Sam just said. I agree with everything you just said. If you disagree, call in. We'd love to talk to you about it. If you think this is a dangerous thing to do. But Sam, I think you hit it right on the head. I love it. I think the best human attempt at peace, and I say human attempt because, remember, we serve the Prince of Peace, and true peace only comes in this world when Christ rules. And he's coming back someday. We'll have true peace then. Breaking news. That's going to happen. We win in the end, which is awesome. But until that happens, we need human attempts at peace. And the best human attempt at peace comes through strength. When the good guys carry the biggest stick and have the strongest military, the bad guys aren't going to do nefarious things, or they'll be deterred from doing nefarious things. The strongest guy on the block can achieve peace for the weak guys simply by his presence and by the fear that he instills. And hopefully the strongest guy on the block is a good guy.
The world's a playground, right?
Yeah,
and there's all
exactly
the bullies
right.
out there, and the bullies might pick on each other, whoever's the smaller bully, but they're not going to pick on the big guy.
I'm glad you brought the bully thing up, Sam, because there's a difference between bullying other nations and using tax dollars to bully other nations and simply letting other nations know you better not bully us or it's not going to go well
Bully the
for you.
bullies.
Exactly right. This is the latter. This is Trump doing the latter. All he's doing is saying, do not bully us, or it's not going to go well for you. Don't bully the free nations of the world, or it's not going to go well for you. I love this. I think it's great. And as I've said before, Sam, you said it, hit it right on the head. There are severe limits that should be put on the government spending taxpayer dollars. The government should not spend taxpayer dollars on Michelle Obama memorial trails. But I'm okay with
I'm sure it's a very nice trail.
I'm sure it's a wonderful trail. Exactly right. It would cost like $3 million or something. But I'm okay with our government spending money to have a strong military. I think that's a really good thing. If I'm going to be taxed, spend the tax dollars doing that. I'm okay with that. I like my government to keep the defense of my country and my children as a top priority. I think that's a good thing.
Well, you're already seeing this result in Iran, right? Because they're having their uprising over there, and Trump's threatening a response. I don't think he's actually going to have to do anything. I think the reason that uprising is going on is because the Iranian government is terrified to do anything about it at all because Trump blew up their nukes. So what can they do? And they know because he blew up their nukes, he's going to be willing to do something else if they do anything at all. So I think they're scared out of their wits.
Absolutely. Now, folks, tell us what you think. I mean, if you disagree, if you think this is warmongering, we'd love to hear about it. Let us know. I don't think this is warmongering. I think this is very different. This is not tax dollars spent on funding foreign forever wars in Ukraine. This is bolstering our military so that the Ukraines don't happen again.
Plus he's putting the military-industrial complex in check, saying, hey, you guys can't make money unless you actually make us stuff.
That's really, really good. That's really good. Here's the deal, folks. I want the Trump administration to be careful. I think they do need to be careful with this, but this is a welcome difference from what we saw in the last 4 years. Sam, can you imagine if the stuff in Ukraine was boiling over now, or the stuff in Israel from 2023 was boiling over now? I can't help but wonder if those countries, if Russia or Hamas had to deal with Trump instead of Biden, they probably wouldn't have made the moves they did.
Well, I remember reading this. I don't know if this is apocryphal or not, but there were wires from inside Iran during the late stages of the Biden administration, and they were saying things like, hey, we better do something now because Trump's coming, and you know what Trump's like. He's not so fun to deal with.
Absolutely. So I think this is good stuff. If you disagree, folks, give us a call, or you can mention in the chat as well. If we're missing something also, maybe you're someone who served in the military and you see something like this and you can see how, maybe the funding a strong military, there's some things that happen that can kickstart things, all that. From what I see, though, I think this is great.
I think the only thing to be concerned about is what are the threats that Trump is seeing that he thinks we need this increase in the military budget. That does give some cause for concern. And
even with that, Sam, I think it's encouraging to know, okay, we don't know what those threats are, but hopefully our intel does. And they're making the moves now.
It's better than just, we know there's threats out there and we're not going to do anything about it.
Exactly. So, folks, you can let us know if you disagree. In some other news this morning, we did get the jobs report out. Quickly, I'll just mention payrolls rose 50,000 in December. That's slightly less than expected, but unemployment fell to 4.4% as well. So a bit of a mixed bag for the jobs numbers this morning. In some other news here, Sam, interesting stuff. Looks like Americans don't really want to invest, and there's some reasons why. Can you give us those quickly?
At least some of them do. Actually, a good portion of Americans do invest, but there was a recent Philadelphia Fed survey. I think it's important to look at this going into the new year, looking at Americans that don't invest. What are your big reasons for not doing it? Number one is they frankly don't think they have enough financial resources to do so. 45% say that, followed by simply they don't understand the stock market. That was 38%. Number three is the stock market's too volatile. Number four, investing's not a current financial priority. And then number five, they just think the current economy is not a good time to invest. So kind of similar to number three there.
Interesting. And then even one more headline that we saw here is a lot of Americans are clueless about what goes into their 401k.
Yeah, about half of them, and that number is even higher among younger Americans, which is probably not too surprising.
Yeah. So, folks, listen, we believe here at the ministry that you need to know where your investments are. And so that's actually something we're going to touch on this next week. Mark's going to go a little bit into a deeper dive on these very topics here. I'm excited for them, particularly that 401k one, Sam, because we've been getting a lot of questions about that lately on, okay, I'm at a job, I want to be biblically responsible, but my 401k at work, there's just no biblically responsible options, so what do I do? So tune in for that next week, folks. I think it's going to be a real good time and well worth your while to listen to that. We also have a 401k sample letter that we call it. This is a letter that Mark drafted for anyone who is interested in getting a copy of this. We'll give this to you. This is a letter. It's just a draft. It's a letter that you can personalize to send to your employer, basically to request that they would include biblically responsible options in their employee 401k plan. It's not a big ask for an employee or for a employer.
Seth, how did they get that letter?
It's very easy. All you have to do is send me an email, Seth@FISM.tv. Just send me an email. We will have this up on our website at some point, but right now we just have it in email. So send me an email. I'll be glad to send that over to you. We got Stefan Padfield coming up next here, folks. Good to be here with you on this Friday morning. Make sure to join the conversation. You can say hello on our chat as well. We'll be right back after this break. Don't go anywhere.
Have you ever wanted to...
My wife and I, we moved into this neighborhood. We had some experience with Crossroads Kids Club. We had served at another club. We kind of thought to ourselves, like, it would be really, really cool for us to actually bring in a club that was able to share the love of Jesus with kids directly into the school. And so we started our Crossroads at Hilltop.
Crossroads is amazing. You can learn all kinds of things about God. That He loves all of us. He died on the cross to pay for our sins. That He will help me in every way.
There is just such tremendous opportunity to reach kids in some of these areas that just aren't being reached.
Sometimes I pray every night. When I feel alone sometimes, God is right there sitting next to me. I can rely on Him no matter what happens.
Help reach kids with the hope of the gospel. Visit reachOurschools.com.
Well, I'm going to give a real quick testimony. I've been a partner for 8 years. I count on FISM analysis for my buys and sells. I don't want to be a financial analyst. That's what I'm a partner for.
And we don't want you to have to be a financial analyst.
The Financial Issues Partnership is the best value out there. The analytics you guys do really give me confidence. So thanks for everything, guys. I pray for the ministry every day.
Go to financialissues.org to get started today.
I found out I was pregnant when I was 21 years old. For me, I was scared, I was shaking. They do an ultrasound, and that's when everything changed. When I saw my baby, and when I heard her heartbeat, that was it. We've seen the hand of God ever since we stepped into the pregnancy center.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Folks, good to be here with you today. Hey, listen, I wanted to make a bit of a clarification there. If you send an email to me at Seth@FISM.tv, that will still come to me, but a better email address is Seth@financialissues.org. My gracious team in there reminded me what my email address is. So Seth@financialissues.org. If you want that 401k letter, we'd be happy to send that over to you. Just send me an email, and I'll be glad to send a copy of that over to you. All right, folks, let's get to a very fascinating conversation that we have here. So as you all know, one of our dear friends here at the ministry, a man by the name of Stefan Padfield, he is in the trenches of working to get companies to stop doing woke nonsense. It's pretty simple, and it's an amazing thing that he does. Stefan is the executive director of the Free Enterprise Project at the National Center for Public Policy Research. And Stefan, I just want to tell you, brother, we appreciate your tireless effort to expose the godless nonsense that we see in corporate America. Brother, it's an honor to have you on today. Thanks for joining me.
Well, thank you so much for having me back. It's always great to be here, and the feeling is definitely mutual. Appreciate all the great work that you and your crew there are doing. So thank you.
Absolutely. And folks, you can check out Stefan's work. Again, it's the National Center for Public Policy Research. You can check that out there. Could you tell us quickly here, Stefan, what's a good web address that people can go to?
Sure. So the main one is nationalcenter.org.
Great.
And that'll get you access to all our projects, including the one that I head up, which is the Free Enterprise Project.
Awesome. Well, speaking of that, Stefan, you guys are gearing up for 2026 by submitting multiple shareholder proposals this year, just seeking information about whether companies are considering return on investment when implementing their leftist ESG or DEI agendas using shareholder money. Now, I find this especially fascinating because I consider myself a rather simple guy, but my assumption is that if you're a company, your main objective should be return on investment and making a profit. Apparently, for a lot of these companies, it's not, though. You actually had penned a piece in Real Clear Markets over the Christmas holiday highlighting this exact issue. So tell us about this, brother. What are these companies doing exactly?
Yeah, so on multiple levels, there are reasons to be concerned that investments that are being made under the broad umbrella of sustainability, ESG, which would include DEI, are not being vetted in the same way that other business decisions and other investments are, which, sort of MBA 101, Finance 101, you would expect things like net present value calculations, return on investment calculations. Now, it's absolutely true that those aren't the be-all or end-all of business decision-making. Sometimes you can't get that data. Sometimes you have to do things that are, you have to do regulatory compliance, and it becomes a cost center. But there's clearly enough red flags that this has become one of our primary issues this proxy season. So we've gone out to a lot of companies, and we're just asking a really basic question. So, for example, what is the ROI on your DEI? Right? Seems like something very basic. And the answers, it really is, the whole idea of just asking questions often gets mocked, but this really is a genuine question. And we're very open to responses from companies that say everything from, yeah, we have that data, to, you know what, we don't have it, and we haven't even tried, but we're willing to be honest about that, and everything in between. So there's been a lot of good engagement, I think, and this is all ultimately about getting to the truth about these investments and the way these companies are going about their business.
And if you can share this with us, brother, what are some of the companies that are doing this right now? And once again, if that's not, information that we're able to have, just maybe generally, are these big publicly traded companies, certain sectors? What's this looking like?
Absolutely. I think the simplest thing that any of your listeners and viewers can do if they're interested in a particular company is just basically Google the company's name and ESG report. Almost every major corporation has a report out. It's, it can be 50 pages sometimes. And then what's so beautiful with AI today, right? You can basically ask, upload it to some AI program that you feel pretty good about, and just ask it basic questions like, are the ESG, the impact, the sustainability investments properly justified by financial metrics, or are there red flags about this being done for other reasons? And you'll get back, I think almost always, there are gaps, right? And that's not to say that the corporation isn't doing it, but just didn't disclose it. But there's definitely room for improvement on those disclosures. And there's definitely room to be concerned that these types of investments are being handled differently than what you would traditionally expect.
Stefan, it's interesting. And by the way, folks, we're talking to Stefan Padfield, the Executive Director of Free Enterprise Project at the National Center for Public Policy Research. Brother, I would imagine many of us would assume that, we're a year into the Trump administration now. With all the work that Trump has done to stamp out DEI and wokeism in the workforce, my assumption just coming into this would be, well, there must not be any companies that are doing this stuff anymore. It's wonderful. Everything's hunky-dory. Sounds to me, though, like you're saying, there's a lot of companies that are still doing some of this nonsense. Is this still a serious issue?
Absolutely. I think there are very many reasons to celebrate and to be positive about the direction that we're currently heading in. But at the same time, we're seeing a lot of just basic rebranding. We're seeing a lot of retrenchment. So people are just being moved around under different labels, but they're still there and arguably have the same agenda, right? Somebody's not going to, if they've expressed a commitment to, basically neo-racism in the name of anti-racism, that's not going to change just because of some CEO, right? So there is still so much work to be done. And really, it is a little bit of whack-a-mole, right? So a lot of these companies, one of the first things we have to do if we're going to ask them about their DEI is, do they even call it DEI anymore, right? So there's all, the equity has definitely seen its way out the door at most places. So you rarely hear that word anymore because it's become clear how that's associated with essentially quotas and illegal discrimination. But it's still there. It just takes a little more work to get to it. Now, is that am I suggesting that there isn't substantive change? No, there is substantive change, but we're definitely not in the place where we can just sort of slap ourselves on the back, congratulate ourselves, and move on to other issues. This is going to continue for quite a while. The people that are committed to this racism in the name of anti-racism, I'll call it, discrimination in the name of anti-discrimination, they're not going anywhere, right? And the same thing with the climate agenda, right? The climate hysteria, the net zero in 2030, which was never possible. And even if they got there, it wouldn't make a bit of difference. It's basically just throwing money away. So that issue is, people that are committed to that, they're not going to just drop that. So we still have a lot of work to do to uncover that and keep an eye on the rebranding and how it's being restructured and so on.
Well, I'm so grateful for the work that you guys are doing, brother. Here's something that I'll ask you, Stefan. As our listeners go through and look up what companies are doing, like you said, do a Google search, maybe run it through AI, something like that. What are some keywords that we need to be looking for? Because like you said, I think these seem to be dry language that was, quote unquote, safe to use under the Biden administration when talking about probably using new language, I would imagine, now to sneak it through. What are some buzzwords that we need to be looking for?
Yeah, I mean, I think the one that is easiest to miss is some companies have used belonging as their new DEI branding. Sometimes they'll just, I was just looking at a proposal where it's a D and I, right? Or just inclusion. But an easy way to see where a company is going with this is typically on their webpage, they'll have a come work for us page or an about us page. And pretty quickly on the drop down menu, there'll be something there that you'll see that it's about, inclusion, diversity, what have you. And then you'll get a sense of the language they're using. And real quick, I do want to say that the recent withdrawal negotiations that we've gotten, have successfully entered into. I think we have Prudential, Exxon, Eli Lilly, AT&T, Capital One, and we've got two more in the pipeline. Those are all moving the needle. Prudential was a DEI proposal and engagement, and the other four are dealing with this ROI issue. So I definitely encourage your viewers and listeners to go to our website. We've got a press release up, and they can read some of the changes there in terms of moving the needle in the right direction.
Great work, brother. That was something that I was going to ask you about, actually. Tell us the name of those five companies again, because those are not small corporations. These are some heavy hitters there. What are they?
Yeah, absolutely. So again, it's Prudential, Exxon, Capital One, Eli Lilly, and AT&T, right? And one of the things that we do, and again, I really do encourage folks to go look at that press release and take a look at the types of things that we view as positive and significant enough to withdraw a proposal. And it can take different forms. Sometimes we'll have a conversation and we always try to engage in good faith. We believe everything we're doing is in the best interest of the corporation, so it should be win-win, right? And sometimes we'll show up and a company will say, well, look, we're already doing this, or we've already done this other thing, and we're willing to, sort of say a little more about this or move this disclosure. And obviously we love the big splashy wins, but the moving the needle wins are incredibly important as well. And sometimes, I was here with you, I think recently talking about the whole CVS and human rights campaign, and they ended their partnership. We had a proposal there on that issue. It didn't even get on the proxy. But it's hard for me not to believe that there's a connection. So those are big name companies. Most, if not all, the companies we deal with are recognizable companies, and we're having an impact. And I think there's more willingness on the part of corporations, and maybe this is directly attributable to Trump getting in the White House, to engage with us, to take action, to move the needle back to neutral and to a place where we can all just get back to the business of business.
That's awesome, brother. One of the reasons why I love having you on the program, Stefan, is because you guys, I see you guys as a key ally with the work that we're doing here. We're teaching people to invest their money in a way that honors God by investing in companies that, like you said, are back at neutral. They're just in the business of making a good business. They're flipping hamburgers, making widgets. You guys are boots on the ground trying to move the needle in some of these bigger companies. And I love that you're doing that. As we come together, it's like a puzzle piece that fits together perfectly, man. It's really awesome. And it's an honor to get to lift you guys up. One more thing for you, brother, here before we have to let you go. What are some other things that you guys are working on right now, and how can we follow them?
Well, so one issue that I think will be of great interest to you and our listeners is we've got a couple of places where we've got a proposal that we're calling a women's rights audit. And what we're basically asking for is a report from companies that appear to be all in on transgenderism in one way or another. And we're asking them, as a matter of fiduciary duty, are you making that decision on a fully informed basis? And what would that look like? Well, first of all, you should have a definition of woman, right? You should be able to define the word woman if you're going to start backing this idea that a man can become a woman simply by saying so, right? And then the other is, are you actually taking into account all the risks to actual women, to females, right? Girls in their sports, girls under medical treatment for transitioning, right? It goes on and on. Men getting into women's prisons and bathrooms and so on, and all these issues. Like, these companies, I think on some level, I mean, we hope they're taking this into consideration, but I don't think they are. And so hopefully that particular proposal and that issue and that engagement will continue to make some inroads. I can tell you already, we've had at least one company really dig in their heels on this. I'm not going to say the name so far, but we really expect that to shine some light on this. I mean, the Trump administration said defending biological reality is one of their priorities, and we're all here for that.
Brother, we appreciate the work you guys do so much at the National Center, Stefan. Thank you for joining me today. Folks, if you have to leave us, have a great weekend, a blessed day of worship, and we'll see you on Monday. The rest of you, we got more financial issues coming around the corner. Don't miss it.
Preborn is making motherhood possible for thousands of moms across America.
I found out that I was pregnant, and my family, they were like, no, you're not having this baby. I met Miss Linda. She told me about all the great resources, like they offer free baby clothes, they offer free classes, stuff for her mom. She prayed with me. She told me to ask God to, guide me to my decision. She made it completely like my choice. She offered to get me an ultrasound, and I found out I was 6 weeks pregnant. That's where I very first heard the heartbeat of my son, and I was sold. Whatever I gotta do, whatever comes my way, I'm just gonna, have this baby. It was really a great thing that I was led to the choice to keep on.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
There are moments in life that investing.
Grateful for each of you this morning. Mark's going to be back Monday. Looking forward to have him back. Happy to sit in and get to answer your questions, which we'll get to in just a moment here. Before we do so, though, folks, let me just tell you that the markets were mixed yesterday. The Dow Jones, of course, resumed its winning ways, thanks in part to Trump's efforts to bolster the military, as we talked about earlier. Thursday's bell saw the Dow Jones up 0.5%. The S&P 500 was flat, basically, and the NASDAQ mirroring the Dow Jones, but in the downward direction, down almost 0.5%. As of this morning, let's see where the markets are right now.
I'm kind of excited about the jobs report.
Yeah,
they thinking, it means there's going to be more rate cuts.
That's what they're thinking. Moderately excited. The Dow Jones is up 1/4. The S&P 500 is up 1/5, and the NASDAQ is just above the flat line. So let's see here.
I was also seeing there was a kind of a defense stock sell-off. People taking the gains on that.
There was, yep. I was going to look for the prices of oil, which are sitting right around $58, $59 a barrel. That's what we're looking at. All right, folks, quick note for partners as well. If you're a partner with us, and if you're not one, by the way, you can become one at financialissues.org. I'm excited to tell you, we now have an autofill feature on the website. This is really exciting. If you enter a position into your portfolio the old way, you used to have to open up a separate tab and fill in the information for it, the industry, all that sort of thing. It now autofills for you. So if you put the ticker symbol in, it autofills the rest of it. It's a great feature.
Seth, I was so pleasantly surprised by this yesterday. I was adding something to my portfolio on the website, and I said, Seth, it's autofilling.
It's working.
Everything's changed.
Tabs. Yeah, it's really good. So partners, try that out. If you're rebalancing or if you're finding something on the buy list, give that a shot there. That's good stuff. Well, Sam, let's get to some questions here. We got a lot to get to. Who do we have first?
Up first is Kathy. She says he has about $100,000 and she's 55, working and trying to catch up on those retirement funds. She's now managing her retirement fund as she once was with Dan Celia. She's making roughly $180,000 a year, and she just wants to know what the best model is so that she could catch up. She would like to use more stocks than mutual funds.
Well, Kathy, great work on deciding to catch up, and thanks for your question. You know, now's the time to do it. I'll say this, you're off to a great start. $100,000 is nothing to sneeze at. You also have a great salary to make up ground. That's a great salary, especially if you've captured the secret to living within your means, which by the looks of it, because you're looking to make up ground and you're really ready to fund your retirement, my guess is you probably have learned to live within your means, which is awesome. So let me give you a couple thoughts based on the clues you gave. Number one, the biggest clue is your desire to catch up. Ordinarily, your age and life stage would probably lead me to tell you that the growth and income model would be the best one for you. When you're nearing retirement or starting retirement, that tends to be the one. However, because you have, and again, 100,000 is nothing to sneeze at, but it's relatively small for your age. You have a relatively smaller amount of money you have saved at 55. And because you verbalized your desire to make up some ground, I personally would love to see you in something that might give the chance to be a little more aggressive. The second clue that I'd tell you from what you said is you want to be in more stocks than mutual funds. So with the desire to make up ground and the fact that you want to be in more stocks as opposed to mutual funds, more equities, I think the model that's best suited for you, Kathy, quite frankly, right now in your life is the FISM growth model. I really do. Ordinarily, we'd say 0 to 50 years old, but because of what you said there, even though you're slightly above that, I think it's a great model for you. You're 55, just picture this with me. I assume usual retirement age of 65 or so. If that's the case, Kathy, you have about 5 to 7 years where you can really be aggressive. Now, keep in mind, each model, Kathy, has elements of some of the other models in them. So you don't have to only have growth stocks if you're in the growth model. It's a lot of growth stocks. It's a lot of aggressive-minded stocks, but it's not only. In fact, I'll just tell you, my second best performer in my portfolio right now, and it's the one that I'm most heavily weighted in, is a tech stock that pays a dividend. A lot of you probably have it. It's characterized on our website as a growth and income, but it's a fantastic aggressive performer.
Right now, that's my best performer, by the way. I know what you're talking about.
Sam knows what it is. If you're a partner, you probably know what the stock is here. My point with that is the picks are up to you, and you don't have to have only growth stocks. You can have growth and income in there. You might even have some income producers in there as well, but it's going to be heavily weighted into those growth-minded stocks. Kathy, I envision for you that when you get within a few years of retirement age, whenever that is, and again, I'm assuming 65 because that's the general age, then maybe it's time to switch to the growth and income model slowly. You don't have to do it right away. Slowly over time, you'll still have some growth stocks in there, but with a little more dividend paying plays. And then as you gradually move into the income model, there's still going to be some growth there to keep up with inflation for sure. Ultimately, Kathy, the beauty of the strategy is it really is up to you. Really is up to you. And so I would encourage you and anyone else who might be in a situation similar to Kathy, ask yourself these questions. How much risk tolerance do I have at 55 and still working? My guess is from what you said, you probably have a lot. You want to catch up, you're willing to put some money away, and you're going to keep on working. That's actually the next question that I would encourage you to ask yourself is how much longer do I plan to work? I assumed 65 is when you retire, but who knows? You might be in good health. You might love your job. I wouldn't mind if I was in your shoes and making $180K a year and I liked the job, that'd be a pretty good situation too. So you might want to work till you're 75. Who knows? That's something for you to consider as well, because that's going to impact this too. And then lastly, how much of that $180,000, which again, props to you, it's a great salary, do I need to live off of, and how much can I put to work for my retirement? Because if you only need to live off a little bit of that, you can put a lot to work and make up some ground pretty quickly. That's not a guarantee for sure, but I'm just telling you, those principles, you put those in place, generally they lead to certain kinds of results. So Kathy, I trust that you'll make a wise decision. It's a great question. I appreciate your desire to honor God with your investments. You're in a great spot. You've got that $100,000 to start, and you've got a great salary. Sounds like you got a great mindset to do it, so keep it up. It's great work on you. Sam, what else do we have there?
Up next, we have Keith. Keith's asking about Blue Owl. He says he really likes this stock. He wants to invest more in it, but he just wants to know, why is it a hold right now?
Keith, it's a good question. I appreciate it. A couple things about Blue Owl. So the first thing to keep in mind is there was the merger that never was. So you remember us talking about this back in November. Blue Owl was slated to merge a private credit fund into its main publicly traded corporation, then announced in the 11th hour that the merger had been called off. Nothing to, to scream about and start abandoning ship for, but it was just something to consider there. The boards of these two firms apparently didn't really see the benefits of merging the funds. They weighed in volatility, negative headlines. This is according to some news outlets. This isn't me saying this, just this is what the news was saying. Blue Owl confirmed in a press release that the proposed merger had been terminated. They cited current market conditions, whatever that means. I don't think it's a big deal overall for sure, but it's something to consider for those placing new money. Now, for our purposes, Keith, Blue Owl, I think, still has some of that FISM steel that Mark talks about. We don't want to see companies that rust away at the bottom. We want to see that good, solid steel. It doesn't mean it's a steel company. It's a metaphor to talk about a strong, good company. Blue Owl pays a great dividend. It's in the neighborhood of 12% right now. It's also a relatively cheap stock, which Sam knows this. I don't mind cheap stocks. I like buying stocks that are going to be a little bit lower in value so that they can have room to ride up. But here are some concerns with it, Keith. He's a penny pincher. It's exactly right. I'm very miserly, in that way. Keith, here are some concerns about Blue Owl. Its debt to equity ratio is quite a bit higher than we'd like to see right now, and that debt to equity is unfortunately on an upward trajectory. For the past 5 years, that debt to equity ratio has been rising. Also, its debt level is not very well covered by its operating cash flow. Same with its interest level. This is, again, it's nothing to start sounding the alarm bells about, but it's something to keep an eye on for sure. And for us, we really feel like it's not the best option to place new money into. That's why it's on the hold list right now and not a buy. Some things to be wary of, but I think a viable play for you if you're dollar cost averaging. And you said in your question that you already own it. So I'd say follow your instinct. You're welcome to still add to it. No need to sell at this point. Absolutely. We still believe that the steel can return in this one. We just want to see it happen. We want to be able to see some of that strength come back a little bit before putting this one back on the buy list.
I mean, I get why you like likes it. That 12% dividend is pretty awesome.
It pays a great dividend. You're getting paid to wait, as Mark says. But once again, just a little more of that steel, a little bit less of the rust. Keith, it's a good question, and I do appreciate you asking that one. I don't think we're going to have time to get to Jan's question here, but Sam, we did get a quick question coming in from Trevor. Trevor's a new partner. I'll just read this one here because I've got it here. Trevor's asking, how often do you review the different stocks on the buy list and change the status from buy to hold or vice versa? Trevor, I'm glad you asked that. We are constantly reviewing, and I do mean constantly. Several times a week, we are combing through the buy list, looking to see which stocks, and the broad list as well, to see which ones need to go on buy, go back on hold, vice versa. Each
Screening
week,
for BRI.
Yeah, we screen for BRI
stuff all the time.
Yep, absolutely. And Sam has a huge part to play in that. Sam is combing through these companies with a fine-tooth comb. So is Mark. So am I.
Got to see who goes on the naughty list,
That's
Seth.
exactly right. And even as we saw with the recent sell alert, which we talked about in our partner conference call, these things can happen. And so we want to be ready no matter when they happen. So Trevor, the answer for you as a new partner is often. Once a week, our analyst team meets and we make those decisions of what goes on the buy list, hold list, if there are any sell alerts, things like that. But it really is a daily process. We're constantly looking at it.
I would say if he's wondering about a complete and total review of everything, a complete thorough review, that's probably done every month and a half, right? Because we go through different sectors each week.
Absolutely. There's a lot of stocks to comb through, and we comb through it with a fine-tooth comb.
But different things can arise. So if some emergency arises with some company, we're going to talk about that right away. We're not putting that off till that sector comes up in the meeting.
Yeah. We want to be able to do that for you, Trevor, and for all of you, so that you don't have to feel the burden to be able to do that. You can count on us to be able to do that. If you've got the time to do it, look at these companies. By all means, feel free. Use the screening tools that we offer. We have our free screener up on the website, but it'd be a great thing for you to do. Trevor, appreciate your partnership. Appreciate that you've joined us as well. More questions on the other side of this break coming, folks. It's great to be here with you. We'll be right back after this break.
My name is Reagan Gardner, and I am in the 4th grade. Last year, I wanted to be like everybody else. I thought I had to act different, look different, and be different to be cool. When I joined Crossroads, I learned that God loves me just the way that I am.
Help reach more kids like Reagan with the hope of the gospel. To learn more about Crossroads Kids Club and how you can get involved, visit reachOurschools.com.
As a member of
My baby was like this big, and I saw his heart beating on the screen. I went from, I don't want this baby, to talking to my child on the screen. That sonogram changed my life. I went from just Candace to Mom.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Folks, I really do enjoy getting to be on the show with you. I treasure these opportunities a lot. Again, we're looking forward to having Mark back on Monday. Appreciate your prayers for him as he's serving the family of one of his dear friends who passed away. So just so grateful for him and for his wisdom, and grateful for the opportunity to get to fill in for him on this Friday. Sam, let's keep going with some of these questions here. Let's get to Jan. What's Jan asking?
Yeah, Jan is wondering about gains. She says she's very new to investing and really doesn't know what to do when she's trying to mess with her portfolio. She says the gains are not large that she's seeing, but since transferring her 401k with Fidelity to an IRA in November, there has been a gain of about 9.38%. She says to her, this seems pretty awesome. So should she just leave it alone, or should she do something with those gains, perhaps harvest some of those?
Well, Jen, first of all, great job, and praise God for those gains you've seen in your portfolio. That 9+% gain is awesome. That's really awesome. Great job being faithful. I'm so proud of you. Let me give you a few things to think about when we talk about this question that you asked about what to do with those gains. So there's an old saying in investing, and it's not a hard and fast rule, Jan, but it's something that you can live by as a principle. And the principle is this: let your winners ride. I'll say it again. Let your winners ride. To a degree, you should follow
the version, let your winners win.
Yeah,
that's why we call them winners.
Exactly. Let them win. Let them go. If you have stocks that are doing well, let those babies ride, especially if you have a long-term time horizon. Now, you're 65, so your time horizon might be different than mine in my 30s or Sam in his 30s. We got a long way to go. You might not have as long to go, but still, I think it applies. You can let those winners win. The point with that really is, your portfolio is up almost 10%. That's a winner. That's great. But you also have a lot of room to grow there, for sure. You don't want to cut your gains too short by taking profits too quickly with any gain. That's really the point that I'm trying to get there. Even 20, 30%, you might be thinking, okay, is it time to take those gains? And you might consider, no, just let it ride a little bit more. What I would encourage you to do is make sure that you're mindful of your concentration in any one particular stock. If one particular stock is going through the moon, it might be time to pare back on that one a little bit. But if your portfolio as a whole...
Which can be painful to do.
It can be painful to do because you got to part ways with it, but it's the wise thing to do, as Mark talks about.
But you're not selling out of it. You're still keeping it.
Exactly. And Sam, it's the whole idea of the 2x4 and you're walking across the Empire State Building versus the 2x4 on the sidewalk. If you fall off one versus the other, it's going to be much safer for you, obviously. So, Jan, once you get to the point where you're heavily up in some of those singular positions, then I think you really consider taking profits and reinvesting elsewhere. Bottom line, Jan, praise God for those gains. 9.38% is nothing to sneeze at. That's really good. And I'd say let that continue to ride. My guess is, and this is part of why I say this too, you're still building out your IRA. You transferred it over 2 months ago. I believe it was November that you said. So keep looking on the buy list for those holdings to deploy. Fill out the proper allocation for your model. Let that thing go. Follow the buys, follow the sells. Really, I think would be a great, great thing for you to do. You've done a great job. Keep on going, Jan. That is awesome. So good stuff. Sam, what do we have next?
I think we're looking at Terry, who says he loves the comment at the end of the weekly message, specifically the recent, he's talking about the commentary, by the way, and he really likes the recent additions to the add, hold, sell list at the end. He said he once asked about a starting date when first recommending a new stock to the buy list so that a person can know when a stock was recommended and at what price. He says, unfortunately...
Great recommendation, by the way.
Yeah, I think it's a pretty good idea. It's something we are talking about behind the scenes of how would we do that and would it be helpful to enough people? But anyway, he says, unfortunately, I can say that I'm down a lot more than I want to be following your buy list. He's down about 20% since he became a member. He says he still will renew. He still likes FISM because he believes in biblically responsible investing, and he does admit that he's not very diversified, and he's only been doing this for around a year, and he's working to improve on that. And he ends saying, thank you and God bless.
Well, Terry, first of all, thank you for your heart to be biblically responsible. I appreciate that. We all do at the ministry. And thank you for your belief in investing with biblical integrity and your belief in us as well, man. I appreciate that. Terry, by the way, I'm referring to you as a guy. I think the way you spell your name is the guy version. So I apologize if you're a woman, but I'm going to refer to you as a guy based on the spelling of your name. And let me just say this as well, brother. My heart goes out to you that you're down, I think you said right around 20% since becoming a member. Let me do my best, Terry, if I can, to give you some comfort with that. Here are a few thoughts. Let me say this first and foremost. My portfolio from following the FISM model is by God's grace up. I'm very pleased for that. But in the beginning, it was not. In the beginning, it wasn't. In fact, the very first sell that I ever made was a sell at a loss. It's not a bad thing. It's the way it goes. But it was a sell at a loss. It's going to happen. It's going to happen to you. Don't be discouraged. Don't beat yourself up about it. It's the very first sell I made. It wasn't a heavy loss. It was a slight loss, but still it was a loss. And mentally I was thinking, oh man, did I do something wrong or whatever? But don't be discouraged by that. It's going to happen. I see a few clues, Terry, a couple clues in what you said that could indicate to me why you might be down. And it encourages me because these are things that are fixable, okay? Things that are fixable. Here's why you might be down. The biggest clue is that you're not very diversified. That's what you said in your question. Diversification is one of the keys to set you up to be able to offset those losses. If you're only invested in 1 to 5 companies or so, your entire portfolio, the entirety of your investable money is beholden to whatever those companies do. And so you can see now how that could be dangerous because if those companies have bad days, they're going way down. Same goes with sectors. If you're only in the one sector, even if it's the tech sector or something like that, you are now in somewhat of a risky spot because you're beholden to whatever that sector does. So I would encourage you, Terry, this would be priority number 1, would be to get in line with the target allocation. As quickly as you comfortably can, get in line with that target allocation. This will help give you some protection against those downturns. I really believe that to be true, honestly. The secondary clue, this one's not as important as the diversification clue, but I think it is important also, is that you've only been at it for a year. That's still short term. A year feels like a long time, depending on what you're doing, but it's a short-term thing when it comes to investing, especially long-term investing. A year is not a long time. This is a long-term strategy. So you're still in chapter 1 of a very, very long book. You're still in chapter 1. Don't be discouraged if you're down after only a year. Terry, some of the best investing advice I ever heard came from our previous host and my dear friend Shanna Burt, who shared this with me some time ago. I was rolling an old 403B from a former job into a Roth IRA, self-directed Roth IRA, to invest following the FISM growth model. And Shanna gently reminded me that with my time horizon and my aggressive mindset, my portfolio was probably not going to look very good in the beginning. And by the beginning, that could mean the first 2 or 3 years of a long-term strategy. It might not look good. It might look great, but it might not. In fact, she actually said, it might be best to just not even look at the portfolio. You make your selections, you place your trades, you get target allocated, and then you don't look at it much. Because an aggressive-minded portfolio, it's going to lead for good opportunity for long-term growth, but at the very same time, it's also It comes with the game. It's going to lead to short-term volatility. And that's okay. That's part of it. Now, Terry, you didn't say your age and you didn't say what type of portfolio you're in, but you just started. So you've been at it for a year and you're down 20% since becoming a member. So I'm putting the clues together, wondering if you're in more of a growth mindset portfolio. I think that could apply to you then. I think you're in this period now. And so I'd encourage you, Terry, after you get your portfolio properly diversified, which again, that's priority number 1, I want to encourage you, limit how often you check it. Give it some time to grow. I'm not saying put it away and never look at it again, but give it some time to grow. Make your trades, look at it here and there. It might be once a week, might be once a month for you, frankly. But don't be discouraged. Don't be upset by it. Give it some time. Give it some time. Terry, I hope that can be encouraging to you. And once again, I just want to tell you, I feel for you, brother. It's a tough spot to be in. You're in a season where you're being tested, and I want to encourage you to hang in there and stick with it. I so appreciate that you're sticking with the partnership. I think that's excellent. And I believe also that if you stick with those tenets of biblically responsible investing that we often talk about, first things first is biblically responsible investing. Secondly is proper asset allocation. And third is long-term. You're going to do well. I really believe that. And God's going to bless those efforts, brother. I really do. That's not a guarantee. That's not the prosperity gospel. That's just me seeing the God-ordained model of investing well, long-term, building wealth little by little that Proverbs 13 talks about. It generally yields good results. And whether you're blessed in this life or the next, brother, I promise you the blessing will come. So Appreciate that so much, Terry. I hope that can be a comfort to you, brother. So much for that question that you gave us. It's really good. Boy, Sam, I would love to get to Andrew's question here, but I just don't think we have time for it. We're coming to the end of our show today, so we're going to have to save Andrew's question for next week. Andrew, I see your question. I appreciate it so much. Those of you on the chat who've joined, thank you all so much for joining. Brian and George and Lisa, so many of you. Our chat has been popping these last couple days, and I see those encouragement that you guys gave me for being in the show today. Thank you so much. Really, it was a joy to be here with you all today. Let's take one more look at the markets before we sign off for the week here. The indices all up slightly. A little more than they were earlier. The Dow Jones is up around 0.5%. S&P now 0.25%. The Nasdaq is now around 0.8%. The Russell 2000 small cap is up over 1%. So feeling pretty good as of this morning.
And maybe, just maybe, we'll be getting that tariff ruling.
That's right. Yes, Sam. I'm glad you mentioned that. I'm glad you mentioned that, folks. Listen, keep your ears to the ground for that. We'll be talking about that on Monday if it comes out today.
If it happens.
There's rumors that the Supreme Court might rule on Trump's tariff wishes. So you can be sure we'll be talking about that on Monday. But folks, no matter what happens, we want to encourage you to honor God with the money that he's given you. Thank you for your commitment to invest with biblical integrity. God bless you all. Have a great day of worship on Sunday, and we'll talk to you on Monday.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.